3 years. 1, 2, 3. So what you do now? 1, 3, 6. You understood the calculation what I did here? First year 1 plus 0, 1. Second year 1 plus 2, 3. Third year 3 plus 3, 6. So total digits becomes 6. This is what we call double digit. Then your cost is 22,000 and then minus scrap value 2,000. So you have 20,000. What you do is you divide by 6. First year it will be 1. Second year it will be 2. Third year it will be 3. Hope it makes clear for you. So likewise there are various different methods. We are not here to discuss that. So I just want you to understand straight line method and reducing balance method. With this, the calculation is over. Next is accounting. Okay? Let me... Yes. First is the cost. What is in the double entry? In that same example, I buy that car for 22,000. Okay? I buy the car, 22,000 is the cost in the invoice I can see, and I bought on 1st of January 2022. Now, and I have paid this by check or bank transfer. Vehicle to, so you have, yeah, many people will not understand this. Vehicle, I will debit. How much? 22,000. And bank, I will credit 22,000. If I had to show this in a T account, I have vehicle and then I have bank. I debit 22,000 and I credit 22,000. But suppose if I buy on credit, this will go to any given party. Payable, Abdul Ghani or Almana, Saleh Almana, blah blah blah, First Finance, Al Jazeera Finance, whoever. Clear? So this is the first entry. Now we talk about subsequent expenditure. What is subsequent expenditure? Now I bought the car. Okay, then I bought the car, I took out the car, I put on road, I straight go to the Sana signal. So let's assume insurance already part of this. I go to Sana signal, I go to this, vehicle. No. Is that clear? So subsequent expenditure is a very vital part. We get to evaluate and see whether these are part of the car or not part of the car. Now, for example, the wheel cover I cannot capitalize. But if I put the camera, that back camera, that becomes a part of the cost of the asset. And if I had to change the seats entirely, I'm crazy about, very fashion, that and this. And then I also go to one garage, tell him to cut the car roof and put a glass over there. And to have a roof, sunroof. So these expenditure that we incur becomes capitalized. Clear? Okay. Second entry. So this is the first entry. The second entry becomes annual depreciation. If I using the asset, it is important or mandatory that every year we calculate depreciation. And we understood which method. Okay, now the question is, which method to choose? Should I choose straight line method or should I choose reducing balance method? Straight line method. Who decides this? Amir? I thought when you said, quoted two useful examples. Table is a furniture. The furniture usage is almost on a straight line basis. I mean, on a equal basis. So you use it straight line method. But machine, let's say I have a machine. First year, my sale value, end of the year, and the fifth year, my sale value will be same. And what do you think the value reduction over the years? Equal reduction or a big reduction? It will be big, right? Now car. Now you purchase a car for 22,000 in 2022. You want to sell in 2023. You could negotiate with the customer for a reasonable reduction. But after 4 years, if you try to put an equal equation like 2000 into 4, okay, I'll reduct this, and then can you negotiate like this? No, bigger reduction will come because of the nature of that particular asset. So your decision to choose the method comes with 2 points. One is management call, second, nature of the asset. Fine. After choosing the method, you calculated straight line method in the year 1. You go to year 2. One fine morning, the man who calculated depreciation had a fight previous night with his wife, comes and tells, no, I had to change this to reduce imbalance method. Can I do this? I'm not allowed to do this. You have to follow a consistent policy. Now, the method that you follow is, we name it as accounting policy. We will discuss in a different session. IAS 8 talks about accounting policies, fundamental errors, and one more thing, changes in accounting policies. So this is an accounting policy. You decide, okay, reduce imbalance method, and that is my accounting policy. You cannot change. Unless otherwise you have justified reason or any other accounting standard demands a change. Then only you are allowed to change. Is that clear? So the choosing a method, once you choose it is registered, and that becomes an accounting policy of the company, and you got to follow that. Fine. Now we continue with depreciation. Now we calculated. We know 2,850 is my depreciation. How to pass the double entry? Where to debit and where to credit?
Depreciation, debit.
Depreciation expense, I debit, and then where to credit?
Two methods. Accumulated depreciation.
Okay.
Or asset credit.
Preferred method is this, but I agree with what you say. If the company is saying that we need to maintain at net book value, then instead of accumulated depreciation, they go on credit to the cost or the asset account. So this is the best way. So this is annual depreciation. So if I to show through T accounts, you have depreciation expense, and then you have accumulated depreciation. So you debit here, and then you credit here. At the end of the year, this here the narration is accumulated depreciation. Here the narration is depreciation expense. At the end of the year, I need to balance this. This I will transfer to P&L. This goes as an expense that we will show under administrative expense. And this one I will carry forward to next year. So brought forward this. Now 1 January 2020, 31st December 2020. On this date, I am preparing the financial statement. 2020. Yeah.